Thanks, bro. Yeah, it's been a challenge to source the DMC free shit, but hopefully more is coming. More good stuff is coming. All right, guys, how's everybody doing? Who got liquidated? Let's get right into it. Let me just quiet the music down here. All right, welcome. Let's go over a couple of disclaimers. Sup, Coach? So a couple of things. I'm not a financial advisor. This is not financial advice. I'm just a guy covering the markets and doing my own trades. All the tools that I'm using can be found on this awesome website of BAPigindicator.com. All the indicators are listed here. What else? I usually cover some of the other resources that I use, but I'm not going to go over it since we went over it in the morning stream. All right, let's hop right into the markets. So the plan for the stream right now is just to quickly glance at the markets, and then we're going to open up to general chat. Bali's come out with some more crazy shit. So we're going to be taking a look at actually the new tool. Let me see, where's my TradingView here? Give me 1 second. Hello, TradingView? What's going on? Okay, so for some reason my TradingView does not want to load. Henry Hogg, thanks for following, man. Much appreciated. Sorry guys, we're just having some technical difficulties here. The fuck is that open? Okay. Okay, we're just gonna go like this. Nope, that's experimental shit. All right. And actually, while I was off stream, I was messing around with some streaming stuff, you know, trying to figure it all out. And I think next stream there's gonna be some crazy stuff coming. Made Twitch account, but just for you. You made a Twitch. Oh, thanks, man. That's much appreciated. Actually, that's awesome. Yeah, every viewer helps at this point. The hope is to get to affiliate, you know, so that they can start blasting me out on like the homepage and hopefully get some more TA noobs in here, and you know, for you guys to deal with. All right, let's get into it. Quick glance at the markets since this morning. Nasdaq had a big day down for Nasdaq to 0.35%. Let's see, S&P 500 also had a pretty big bleed out at 1.72%. I quickly want to glance at the rates. Rates had a big day up today. So yeah, all the people betting against it, you know, this is kind of like where you get liquidated if you're buying calls on TLT. Let's actually take a look at TLT. TLT entropy is moving down, trend is increasing. I would expect this to continue. You're not getting any sort of extreme on the QMZ. So you got some room to go on the volatility here. Right. Let's take a look quickly at the crypto markets. Bitcoin also following the SPY in the Nasdaq here, actually having a smaller day, which is pretty crazy considering that usually, you know, cryptos are more volatile. You know, with the Nasdaq and the S&P both having larger down days today. We'll see how these assets close. Let's take a look at the volatility as well. Volatility having a big day up. Wow, a very big day up actually. And entropy is moving down on the VIX. So the entropy moving down would suggest that we get more of the same here, as long as the thing continues to move down. Let's take a look at Tesla quickly, just for shits and giggles. Still very low of vol. I would be worried about this. Trend is positive here, but declining. I would be very concerned about this. You know, if we're getting drift upwards, volatility can still come in and kill you to the downside. I'm not saying that that's gonna happen, but I would just be something I'd be wary of, especially because it's very closely related to the other markets. What else? Let's take a look at the Dixie. Dixie having a pretty big day up. Yo, Unk, what's happening, dude? And actually, yesterday when we were looking at the markets, the biggest movers were the oil and gas industry with you dumped the Tesla calls. Shit. Yeah, man, those can get pretty brutal pretty fast. I want to take a look at the nat gas futures because yesterday they had a pretty big day up. Let me just turn the entropy off here for 1 second. Today, not a lot here, not a lot. Just a bit more of the same. Trend is positive here, and I want to go by the sectors, the spiders. Healthcare, bad. Investment trusts, bad. And technology, bad. So that's kind of close to the SPY and the Nasdaq here. Man's been working, true. Actually, no positive sectors today. No positive sectors today. Is this oh, this investment trusts of some sort? All right. All right, let's go to our watch list. Yeah, the only positives I see here are in the currency markets. Actually, US dollar is doing quite well, which makes sense with the assets selling off. Okay, let's take a look. I want to take a look actually. Uncle Bali, can I show off the new tool? Yeah, bro. All right, here we go. So this is what Unk has been working his ass off on. This stuff is still in beta, so we're showing it quite early here, but it's looking very, very powerful. So this is self-similarity. I didn't read the notes yet. I didn't see it, but from the way Skay, thank you so much for the follow, man. Much appreciated. So yeah, I'm not gonna have the 50 EMA app, man. Fuck that. He was using the SMA.
Bro, you.
Oh yeah. Oh, what's happening? You're echoing. Yeah.
Hello?
Yeah, better.
Oh.
All right. So with the new tool here, oh yeah, sorry, I had mine muted in Discord. All right. So with the new tool here, what is it attempting to tell us? It's attempting to tell you when the returns are is it on returns or is it on price? It's attempting to get some self-similarity, and the basic principle is that you know, you're looking for days that are going to be similar to other days. So if this thing's rising, it's saying that the previous day is very likely to be the same as the last day, which would then, yes, it's attempting to get the trend on returns. All right, so very kind of close to DWT, like the principle in DWT, but instead of the autocorrelation which the DWT uses, it's using self-similarity, and it's trying to gauge when something is trending. So it's having days that are similar to each other and when they are not trending. So this can help you actually gauge when to deploy money and when not to deploy, especially if you're a delta trader and you know you're looking for a trend of some sort. You're looking for self-similar days, right? And then it also gauges the extremes in those self-similar trends to kind of denote, hey, maybe you're in an extreme of self-similar days, so you might not want to continue to bet this way. Because it's, you know, things don't usually stay at extremes too long. You can either bet on the extremes or on mean reversion, right? So we saw actually a powerful example during the Arona dump here, when you had a lot of self-similar days and then you had a decline in it. So you kind of knew that this wasn't going to continue onwards. It also works end of persistency. All right. And I'm gonna butcher explaining this because I'm not close to the code on this one and I've just gotten it 10 minutes ago. So I will have Bali on here in just 1 second to kind of go over some of the things I definitely missed. It also...
Yeah, no, you're getting it right. Yeah, it's the whole idea is that what Taleb says about correlation and you know, it's that you use anything that has a standard deviation in it, it will skew it to the extreme because you square the difference to the mean. So one good thing about it is like it gets rid of, if you look at the formula for it's the product inside product of two vectors. So like you get rid of the mean that way uh, as well. So it's just the relationship of two things to each other, and then it makes sense because like you know if it'll for the state of the market, you know, if you get the concept of DWT, this is what you said is very similar to it. It's just a similarity is a better measure to me than correlation.
Right.
Because you know, because correlation has its own problems, and then on top of it, you have like Alec doesn't really talk about the problems with the mean, but here, yeah. So and then like you want also to know persistency, which is like AP tells you. We have a thing that's the it's based on entropy and Hurst, but like also here, when your similarity is at extreme highs, that's when the persistency will end.
Gotcha.
So it also, you know, because you want to move that's similar and has persistency. So you want to, and then if you look at because it's the angle between two vectors, cosine angle between two vectors. You don't need to like think about it in that terms because you just care about it increasing or decreasing.
Right.
Is it more similar or less similar? Right. So and then that MA is just to filter out the noise. The dots are the values. The bands are on the dots, but because will fit the MA because the MA is like shorter. But yeah, well, you know, when it's going up, it'll be blue. It's going down, it's yeah. And then the Rona dump. The great thing about it was that like they'll tell you, it sort of tells you like how confusing it was for people to trade that day too, because like everyone. Like I was short myself, when it was dumping, but like I saw like Tom and everybody else were like, oh, is it gonna dump again? So like this shows that it was confusing to people. But then if you look at like the weekly, or was it here or something? Maybe get rid of the bands. It would have gotten you to buy the bottom and ignore the dump.
Where's the Rona dump? Is this the Rona dump? No, that's the 08 dump. This is the Rona
What are you
dump.
on? What's the ticker?
This is S&P 500 on the weekly.
Right. So it's not. Oh, maybe it's because it's the MA. It's too smooth. So like if you change the thing to dots, I mean it's changed to dots, but if you change it to line, you'll see it. Sorry.
No worries. Yeah, that did.
I just sent it out, so no one.
Yeah.
Okay, see, like so go on the daily now, or this is the weekly, right?
Yeah.
So you'll see it's an extreme low before the dump, and then right, like if you put the bands on now, you'll see this. So when it's going up, that short was good to take, but then. It only goes up. Oh, now that it's colored, I see it's not even. See where it starts going up?
Yeah. Like over here.
The whole point is that the buying the bottom it shows was the move to make because that's where returns are starting getting similar.
Right.
Because like even if you get the direction right, the similarity is low. It's like when you're trading on high entropy. Like you might get it.
Right.
But it's a crazy ride.
Yeah.
So like the same dollar, you can save it and spend it somewhere else where it's not so crazy.
So the thing that this can really help us with is to discern like when is a good time to deploy money and when it isn't. Like even though the trades might have gone your way, it might have just been as a result of luck. And this is trying to discern a bit more information so that you have a little bit more certainty on deploying the actual dollars, right? So that's pretty fucking epic, especially like right here. That was a juicer trade.
Also the thing that like when bands are on and then you see if they're squeezing. So what does that say? It says like, oh, similarity is not, similarity is low.
Yeah.
And like even the variability of it is low too. But that's like a good time to sell premium. But
Gotcha.
you gotta be careful because right after it, it would be very bad time to sell premium.
Right.
It's like a timing tool, and also, the funny thing is with this fucking TA idiots, they say, oh, you can't time this. No. You can totally time it. It's fine. But like the size of the move is the hardest. Like up down is easier to get odds for than it is the size of the move.
Right. So and how long it's going to persist for as well, right?
The tail size. Like if you get a move that is bigger than 2 standard deviation, whatever, you don't know by how much. That's the only thing.
Right.
We're getting there. But this is just if you did the same thing with autocorrelation, you see a lot of times it's pretty useless because like then what do? You have to take its R squared. It's not a thing that you can just say, oh, it's increasing, decreasing, because it's the absolute value for correlation.
Right.
Similarity, you can just say, is it less similar or more similar?
Gotcha. That's pretty crazy. That's pretty crazy that you guys got this out so fast. The Rona dump was incredibly difficult to trade. I mean, this was a lot of up down as well, so it makes sense that the returns aren't that self-similar here because you do have moves in both directions and they're quite aggressive, right? Like
now that it has in the code that like it colors it.
Yeah.
When I was like looking at it when it was all blue, it looked like from the bottom it was going up, but I don't see that here.
Right, gotcha.
Maybe it was because I was on the only difference was I was on the SPX CDF, not like that's the only. It shouldn't matter.
Yeah.
Let me pull up one for myself.
Yeah, I want to see how it is on Bitcoin as well.
Also, there's a thing with the similarity that is like there's also distance.
Yeah.
Just 1 minus the value angular similarity. So like if you think about returns, you want the distance between the returns to be small.
Right.
Right. Like you want it to be big, but then if it's big, you don't know it's to which side. So
right.
Like if you want to take a trade where returns that you're getting are close to each other and similar to each other.
Yeah.
Right. And the more the distance, the higher the odds that you get it wrong.
And there's no limit how long it like the squeeze of the bands can persist for, right? Like it's just
no, it's a cosine of an angle, right? So the distribution of an angle is like I just assumed it to be like we can put it on Anton's probability distribution to see that it's like, but it's not a crazy assumption to think that the cosine, like the distribution of cosine of some angle is normally this.
Right.
So you go, angle should be anything, and cosine is just between 1 and -1, so it's probably normal.
Right. Let's take a look at Mad Dog saying he's looking at coin. Are you looking at it with...
The only divergence that exists is between the vectors if you take the returns as vectors.
Right.
Not fucking meaning of the...
Not the RSI divs? Not the hidden bull bear divs?
That's how you know it just works, because, okay, let's say there's divergence. Okay, what's the angle? Let's do the trigonometry.
You're right.
Trigonometry is not what you're interested in.
So, Unc, if you want to put an alert on this, what do you recommend?
Oh.
Matter Dog is asking.
Another thing you can do, you can put a marksulator on top of it, and like look at this Z-score, right?
Onto the actual indicator, or do I put the indicator and then use source?
Put the indicator and then add the marksulator to it, and then look at the Z-score similarity. Right. Like similarity, and then a lot of these moves where it's gonna make sense that like, oh, here's why it's turned. You'll see, oh, it was at some extreme Z-score, like that's why it turned over.
Gotcha.
And sometimes it doesn't go all the way to it's just like you can observe it. It's just knowing the similarity helps.
Yeah.
And you can observe it however you want.
It's the SSR Pro SS. Is that what I'm setting it onto? or the
Uh,
M value.
oh, 1 second. It's the SS
Yeah,
self similarity. Yeah.
perfect. So we can kind of gauge the local extremes on it, even though it's not getting outside the 2 standard deviation bands. You can still gauge the local
It's
extremes.
interesting to look at.
It can,
Also, for your Z score now, I have to fix that. But like, go to the settings and
yeah,
then change the mean to 30 as well, because that comes default by 50. Like all this time, it sort of doesn't. The first one for our use case, it's sort of like it doesn't. It's less noise because 50 is going to be like less noise because it
yeah,
didn't force people into getting them into like things that don't exist, but you will miss out on things if your mean is too low.
right,
So like for example, see like here when there's a squeeze or whatever,
yeah,
that's why Z-score helps, because you see like a little small move afterwards. It's actually a true standard deviation move. Except when
right.
there's a squeeze and then there's expansion, you'll see. It doesn't. Maybe try RMS percentage on it,
Let's try.
because that's just in relation to the mean. Change the marks later to the mode where it's yeah.
Yep.
I
So
didn't even look at the QCV on it. Like, well, what does the QCV look? Oh, see here, like, so if it's above the mean, you're it's not like a crazy thing to assume a trend.
yeah, it's giving you a
Right?
lot of kind of extremes at the bottom there on the
Yeah,
RMS.
that's we did the same thing with autocorrelation. It's a good observation actually.
Yeah,
Uh, it shows how mean reversion exists, and it's
right.
mostly you're not trend, because look at how much of it is in the negative versus how much of it gets above the mean.
Yeah, that makes sense. So you
Yeah,
only had like 2 times out of probably 20 when it was hitting the bottom.
yeah. Like when it gets up, it's a unusual to like take advantage.
Yeah, yeah. Man, pairing this with like something like direction and volatility would be fucking awesome.
Yeah, yeah. Also check the QCV on it. I wonder what that's, because it's just gonna say like it's like similar to that crab score.
Yeah,
Because if the variation of similarity is low, then you're trending. If the variation of similarity is high, then you're crabbing.
right. It does give you these like long periods of extremes. I feel like the crossover is
You just
pretty.
care about, in this case, you just care about if it's going up or down. And then if I'm gonna like check on
Yeah,
that is very useful, then we'll just make it separately like a craft score.
right.
Because you can make a craft score, you add the QVC to the HVZ, and then you have a craft score. But like if it's useful, we'll just make it into one thing. It doesn't take.
Yeah,
Yeah, and also I didn't make the bands weighted because I don't like the Z-score weighted. Like it's sort of visually it helps, but like for example in HVZ you can see if you turn the weighting on, you're I also put the settings where like now your extreme should be like 1.5, and like I want, like I don't want to have to adjust the extremes. Like I just assume if 2 is, you know what I mean, because it's closer to the price, but then it doesn't like in theory it's better. But like in practice, you go, now I gotta adjust everything. If you turn on like waiting for HVZ, yeah, now it doesn't reach 2, so then I have in the settings to set extremes instead of 2 to 1.5. But 1.5 doesn't mean it.
so this is kind of like the case between like more tradable and more like mathematically sound, right?
Yeah, because there's no such thing as like Z-score is to tell you where you are in the distribution.
Yeah,
And then if it's weighted, then like everything has to be. It's a point of reference, so you don't want to. Yeah.
man, that's fucking sweet.
And then similarity you can apply to price, you can apply to volume. There's another thing that we saw is that like if you do similarity of price and then do the distance, you don't even need return. You're
Right.
observing exactly the same thing as a standard deviation of return.
So is this then, like, I know you guys have a bunch of shit based on autocorrelation. Are those gonna get reworked over time to use with similarity, or are you guys just gonna keep them separate?
Well, no, like DWT, like takes autocorrelation and then takes the residuals. We can do the same thing with similarity.
Right.
So yeah, in things that like we have that use correlation, we're behind the scenes are going to change it to something that you're not even going to notice. So
Right.
like to have tests, they literally would be our invention. Like I didn't see that. And everyone talks about how price is self-similar. All these DA retards talk about this is how you measure it. Yeah, but like yeah, man.
Man, that's epic. Yeah, for guys joining us,
you want to catch it when it's going from an extreme low to an up. So,
right.
So like I would put, that's why I said the Z square, like I would put square on it and then put like an alert low, or like I gotta see how, like, what else if it's by value, by whatever. And then there's a thing that in the code we can put that setting alerts would be easier for you. We gotta do that too.
Guys that are joining us on Twitch, this stuff is in beta right now, so if you're getting access to it, you know, it's going to require some testing, it's going to require some reworks, so you know, there might be yeah, exactly. That's fucking awesome. Well done, guys.
Woo, bro, woo. The whole the sum of the parts greater than the whatever.
The greater than the whatever.
The whole thing needs to be there. And
yeah, fair enough, man. Fair enough. And you sold your Tesla calls today, eh?
Well, yesterday I saw they were in profit, and I just because I didn't want to, because I know it looks dumpy, but I want to stay with my tools.
Yeah.
Like, I gotta go. I just gotta protect the stocks. Like I don't want to.
Yeah, I feel that.
I have the stocks, and for those ones I got protected puts, and then and some leverage shit that I went short because it looks tough.
Yeah.
But remember we saw the thing that on this, was it 7 day or something? The similarity was like at a it was low, but it was extreme. That sort of is the only thing that's.
I think we're looking at the Nasdaq, right? Was it Nasdaq or was it Bitcoin?
It was probably SPX. It was a chart I posted, right? So it was probably SPX or Nasdaq.
Yeah.
It was probably on the weekly or something. The only difference is oh, you're on Bitcoin.
Yeah, I'm on Bitcoin. Yeah, I was looking on the. Actually, on the weekly, the similarity is now moving down on the S&P 500, but it is giving you extreme low.
So like so that's interesting. So if it's so like that could mean like well, and it makes sense because it's like, well, it's not so similar.
Yeah.
And if it's gonna get similar, then yeah.
Scary stuff.
Yeah.
Let's take a look on the daily. The daily, it's fucking moving up.
But it also that thing that like DWT is good, but like it doesn't, like it tells you the autocorrelation, but you know persistency as like extremes of when it's hot. Like, is it going to be persistent? It depends how high the how extreme the high value.
All right. Yeah. Well, with the DWT, it doesn't give you positive autocorrelation too often either, because it's like I feel like it's more for certainty than it is for occurrences.
It's, yeah, exactly. Yeah, it's just like a state of thing. It's not, because we didn't for like Hearst and stuff. We made it more tradable.
Yeah.
They didn't invent these things to put it on the chart. You know, they just wanted they care about the value.
Right.
So like, we made it into indicator.
Yeah.
But DWT is just a test. I mean, just a statistic.
I mean, wasn't Hearst like a physics thing?
I forget. It
Well,
probably
it
was.
was like the distribution of molecules or something. Yeah.
Everything. Yeah, it's funny. There was like a everything like when what's the guy's name? Pearson was a lot like it's all around the same time with the when statistics are getting invented and like I think right.
Yeah, it's something like that.
Like VRT is later a little bit. I like how you made the VRT. That looks much.
Yeah, with the for guys that are using this, the only thing that I did was just put the transparency down to 25, and then I made it into an area. So in case yours looks like lines, I made mine this way because I don't need the actual values off it. I just need confluence between all the time frames. Pay me 2K. Extreme settings.
Yeah, exactly. You did more. You did more. The widget is not even real.
Yeah. Oh man, who else we got in here? We got Henry Huck in the chat, and we got the Weebos.
I was going to ask about the cone. So like escape, the whole cone is the point of reference again. So like if you want it on the way up, set it at a local minimum, and then you want to see like it's just a point of reference. At every point you put it is correct, and then you have to understand. And then the other way you can look at it is like analyze volatility.
Yeah.
HV. So like you can have a 365 mean and a 30, like put MAs on the historical volatility, and then you'll see like why things are happening. So like, and then again, the only assumption there, this is not our problem, this is with everyone, that is the volatility is constant. So like at the point where you take it, it's saying with that, these are the odds. But when you know, like if you put it at a HVZ low, the volatility is increasing.
Right.
The range would change. But that's not our problem. That's like they all assume volatility to be constant. But then the point of the whole thing is that like you want to see like these levels, what to do with them. If it's going up, put it at a local minimum. If it's going down, put it at a local maximum. And then that way, like it's a, it gives you the, you're pulling it up, right?
Yeah, I'm,
for example, right now, what is that, Bitcoin?
This is on Bitcoin. I just wanted to grab the chunk with before the expansion started.
Yeah, well, if you just go by, I'm saying look at the price, and then look at it, like put it at a, it depends like what do you want to do with it, right? If it's, you know, like, if you're trying to get it to fit best, just you know, which is not the point of it. The point of it is like having a point of reference to know like when to exit and shit, right?
Right.
So like the one that gives you the most range, like that is close to a local top. That's why it's working.
Yeah.
And then.
Well, it also coincided with this.
You want to like it's just like you have to be aware of what you're doing. If it's before the expansion, it's the tightest range, right? And then if it's at a if you just go by price, and then like put it at a thing
like a local low,
or like a local high.
Yeah.
Then it's like at least to me that's more tradable. It's like, what did you say? I was playing with the pro. But, you know, the whole point of it was like like when do you exit, right? Like if you have a long, like, and then you don't want to get FOMO. The whole point was like just to that inverse weighting that you. So like if you have two, right? You have the new one, right?
Yeah.
So no, this is the version that you have to. The new one is the one that you don't need to do this. If you go to the indicators, like there's not 3. I think you're on the. Oh
yeah, I was on bars before.
It's the one that has nothing. The one above it, the one that's just pro. The one is date, one is bars, and then we fixed it, and that's pro. And that has 2 points.
Okay.
Yeah, that's the newest one. Okay, so like here, like if you put 1 to I don't know, like put let's say well, it's going down, right? So like let's put one at like 5 each or 2.5 each size. So
Yeah.
so it'd be 95%. And then the other one is like you can put half, so it'd be 99%,
Oh,
whatever.
okay, gotcha. Yeah, 0.5, 0.5,
Yeah,
and then 2.5, and then
and
2.5.
and then turn on the number of heads in a row.
Yes.
So in order to not get FOMO and shit, you know, like who's that asshole? Cowan. He does this, but then he doesn't know how to do the fucking math of the cone, so he just does fractions of like 1/6 or whatever. And not those fractions needs to be based on the odds, right? Because like they're
Yeah.
not equal. So like here you go. This was 2.5%, right? So anything outside of it, this 2.5% to 95%. So anything outside of it, you would put 7.5. So you add up 7.5 plus like the rest of this. What is this? You have 0.55, so 7.5 plus like 0.045, and then you go 2.5 divided by 7.5 plus 0.55 divided by 7, and then that's the amount that is optimal per level. Maybe we got to make that so it like tells you. But like if you search in the Discord, you see what I did. An easier one would be like if you put 70, just so people understand, like put 70%, put 15 on each side, and then like 70% and like I don't know 90%. So what you do is like you go, okay, so if it breaks 70% to this side, would have 15. Oh, I did the math wrong on that one because I did for 70, I did 30, but you should only do 15.
Yeah, you gotta divide it by 2. It's one side. Yeah.
Yeah. So the whole thing is that you add them up, and then you put the value over the sum, and that's the optimal per level. And then you wouldn't even have FOMO. And if price doesn't get there, you don't need to worry about it. When it does, run the same math again.
Yeah.
So like here, you go, okay, so here is 15. So outside of it, oh, what am I doing? This is already outside. So when you say 15, you're saying the outside, right? But it's 15 plus 5, right?
Yeah.
So it's 20, and then you do 15 over 20 plus 5 over 20. Those are your ratios. And if it gets to those levels, you sell based on that rate. And if it doesn't, and if you sold, like if it gets exactly.
Well, hold on. This just equals 1, no?
Well, I'm adding 15 plus. Right.
Yeah.
The portions. Yeah, they should add up to 1.
Okay, because there's sums.
And then like, yeah. So if it gets to like a level, and then like it doesn't get to the level following.
Yeah.
You still sell the like if you had another set the second one or whatever, like if it was lower.
Yeah.
If it didn't get there, that's fine. But like if it gets to this level, you sell this amount every time. And then if it gets over there, you like if it snakes around the same level, you do the same math again, and then because it's just a portion of your bag, right? So it's 3/4 there, right? So every time it gets there, sell 3/4. Like if you want to take a profit on your short. And then wherever you put it, if you put it at the highest level, then it would give you the most room. And then that was my logic, right?
Yeah. So this is kind of just preventing you from following all in short. Like if you missed like this,
you should do this all the time. Really, you should not buy or sell in one scoop. What is it? Scoop or scoop? Not in like you should do it in tranches. Even like it's much easier if you're like thinking about buying, but like taking a short too. Like so also it's like the lower the odds of a level, you'd have less money, like it's like if you wanted to take profit, you just inverse by the probability, and then the whole thing is that you also are not like missing out.
Right.
Your risk is exactly as like because the less likely, the smaller you should be, and the more like yeah. Like I even should do this all the time, but I don't. But it's when we're talking with him, he said he was doing it and he was like it was very profitable. And I was like, of course, like that's it's the optimal way. Anything else is like, how do you know when to sell, when to buy? It has to be levels based on odds, and then the size of it should be the same thing. The more likely, the bigger you are, the bigger the portion.
Yeah.
And then you also don't want to have FOMO, so and then you're going to be small in something that is going up real big.
Yeah. So like he would prevent you from having FOMO.
Yeah.
And just like YOLOing it in.
Yeah.
Because 70% likelihood you stay inside.
It literally, like, you have the outside, and then you add.
Yeah.
You add up all these things, and then that divided by the thing is the size.
Right.
Yeah.
Makes sense.
Yeah, bro.
I was playing with the Cones Pro, and what I found out was it works nicely on price lows, highs, or extreme lows and highs on HVZ. Am I getting that right, or how I? Or yeah, okay, gotcha.
If you understand the logic, it's not different where you put it. You know, I put it at the local highs and local lows because that would give you the most range, and then then it's like easier to act on. But
I keep
wherever you put it, the area that it covers is correct.
Yeah.
The odds for that area is what it is.
I usually keep mine on 25 bars back, just to give me some context to the probability of me staying inside.
That's a different use case, right? Like you want to see what's possible versus like, like to have actionable trade.
Well, it's really up to you on how to use it. You just got to understand the context that, like, okay, you have 15% chance of the price closing outside of this area, right? In this time frame. That's really what it's suggesting.
There's no.
And you have to.
No one does anything wrong with a calculator, right?
Yeah. And you have 70% chance of staying inside over this period of time. That's all that it's suggesting. It is really nice for you know, I go down to the, oh my god, when I go down to the 1 minute to trade, let's see, where did I have my chart? Yes, here. So when we were looking at very low time frames, you know, you're more likely to get those crazy occurrences. So I have a very wide cone. I have it actually 1% and 0.1%. And what I'll do is, you know, I'll take exits on it. So if, for example, I'm betting on an area of low volatility, let's say here, right, I get some sort of a trade setup. Not that this is necessarily one, but let me see. Let me just adjust it back
also,
to.
You could put if you have like HVE, volatility on, you could put the marks rate on it, and with QCV, and if the variability of volatility is going up, then you would have these moves where your regular range will break.
Right. Yeah.
So
Yeah, so like during areas of high volatility, like I would definitely take some off on 1%, and I'd take it off if we got down to 0.1%. It doesn't have to get down there. It's just, you know, to me, that's like a max payout on a bet. You know, like I'm definitely gonna, because the trade's no longer worth it for me there. It's like I got the juice that I got off it. I'm gonna be happy with that. I'd rather defend the profit. Like over here is probably a pretty good example. I don't know how many bars back that is.
You can even like backfit it, and then just to be able to know your side.
Yeah.
Like you can go, okay, how do I fit the cone there where I want it to be?
Yeah.
And then however number of heads in a row, whatever that is, at least you can use it to know like what proportions do you need to exit at.
Like I would have been out on this candle out of a trade. Yeah. and just like I would have missed out on this, but it doesn't matter because the point is to keep the profit you made if you ever make a profit. Yeah, man, the cone is powerful. The cone is very powerful. I did see you guys talking about the tails of the cone being wider.
Yeah.
Or fatter.
Yeah. Like these idiots, they like cone is difficult because getting it accurate is very difficult. But like just like there's no way they call things like because we like say what distributions we're using.
Yeah.
But there's no fucking way they're getting like the parameter right because they're idiots and it's very difficult to do.
Right.
Nobody else can do it. Well, what are the odds of some who they claim, oh, we don't even have power? But the point is, it doesn't match ours. Well, we saw like their expected move doesn't match, and it's very easy. Not every idiot can figure out the optimal parameters. People aren't going to realize, and then you can just say it's Laplace. But they don't. But there's no fucking way they get it right.
Yeah.
They're just random values.
Are there expected moves on TradingView other than the stuff you guys have?
We took them all down because fucking like it's the thing that we introduce a concept. We have to fight the idiots about it, and then when it's popular and everyone agrees it's the thing to do, they just pickpocket. They come and release it like it's the thing that we work. It's the thing we own. Like just
right.
Because, right. So it's like we work to get it popular, and then they come and take. Like if you do it before we start to work, or same thing with the cone. Like it's just it's stealing our work. It's because you got to educate people. You got to. It's a lot of, and they just show up when it's popular, and they want to ride the wave.
Yeah. We actually got down to the 66%. Yeah.
It needs to be fucking accurate. That's the whole point of it.
Yeah.
Like, the whole point of it is accuracy, and none of them. They all have the name. That's our main argument.
Yeah.
Like, you just have an expected move, which is not the expected move. Like if there's only one correct odd.
Right.
Yeah.
I actually want to see what the price on the expected move was today. Can I see it in labels?
No.
Last price.
Label, and it says value.
There.
Indicated name and below. Yeah, that one.
Yeah. So we got the low of today being 14,760, and the range 2 was indicating 14,764. So you're accurate to $4. That's fucking insane.
Guy, the one that we made with Power Law during the dump.
Yeah.
Like prep. I didn't even count. Like I was just talking about it. And prep took a screenshot. That fucking thing is like the most impressive thing I've ever seen. Like that's the power of mathematics. That and then this Selena whatever run up with the mutual information we called it. That's mathematics, man. That is why it's great.
Yeah. Yeah, I don't know how this wouldn't be valuable to someone. It's just like even for expectation management.
Chart, right? Yeah. It's just like what else matters?
Yeah.
Expect moving the cone. Yeah.
I love the original expected move. Yeah, seriously.
Just go well, and the whole thing is like it's there's museums that like hold how much like 1 meter means. Like, I forget.
Yeah. That's right. That's right.
So like,
yeah.
You can have multiple things. There's right, like they go like no, we have our own museum where 1 meter means some other bullshit because we can't figure it out.
Yeah.
Yeah, and then the guy who supposedly is I talked to him. I send him all this shit, and he's choosing to be on the side of the idiot. So how bright? and their shit doesn't match ours. It's not like we're wrong. It's not me doing it. We have like 10 people who check our shit too. The best of TradingView is with us. So if some idiot is choosing to be with the scammers, how private can they be? That's what I'm saying. There's no way they figure out the hard things. They just use the word. They go, oh, Bally's Laplace. So ours is like, this retard, that's why he was putting his standard deviation at level, because he doesn't fucking get it. Right? That was the proof. Like, that's easy. It's the biggest mistake you can make, idiot, is LARPing to be smart, because it's so easy to check.
Yeah. So easy.
You know, go LARP that you're like a fortune teller.
We actually don't get many occurrences. It's like probably on expanding volatility that you get occurrences for the expected moves, not on contracting, right? Like, or are you expecting it to work better during contracting because it makes sense that it would go up?
You should see the fit with like the new one that they're working on.
Yeah.
The new one's gonna come out, mixture of different models, and it's fucking everything fits. It's like everything's like it's insane. You'll see.
That's crazy. Some volatile dude. Thanks for the follow, man. Much appreciated. Fuck, that's crazy.
Yeah, it's yeah, and there's no fucking way they can. Again, we don't have anything against them. We just want the smartest people, and they want other shit. So.
Yeah. Yeah, it mostly stays within that first range.
Yeah, and that was the whole thing with Tasty, right? That like, hey, one standard deviation actually occurs more than one standard deviation, and that is if you go by the implied volatility because it's overstated.
Right.
Like the whole thing. They're like sort of, and they're like implied volatility is just historical volatility matches the price.
Yeah.
And it's like what people think. They're so focused on forward-looking or whatever, but like it's what people think, and it's going to be understated at extreme.
Right.
So it's overstated at normally, and then it matters for pricing because pricing is based on IV. But then that's it. Expected move shouldn't be based on what people say or think. It's based on like what the thing is historically done and what are the odds of it to be similar to what it's done. But like what else? What do you go by? Some asshole put in a bid. The IV is not high. Is the underlying more likely to move? Fuck no. It's just the way he thinks, right?
Liquidity charts. Give me levels.
But it's like that's another thing. Like with the options, it's always just IV. People would tell us like, but also there's a study that if you go by realized, the fit's much better than implied. It's like a very dumb thing they do. That like, oh, expected move should be by implied. There's no reason.
Yeah. I honestly think it's just because it has that correlation with forward looking that like people really focused on it, whereas you know the historical stuff, it gives you much clearer picture.
Yeah, but because it's in front of them. They don't even look at historical. Like I saw one time Julu or someone was like, can we add historical volatility to the shit we look at? And Tom lost his shit because he had to work historical. But like, what else? And then that's why like HVP works better than IVP or you know, because like IV is just like, you know, you can see it. IV, you know, the way they, I used to say like IV, like was it the chicken or the egg? The egg came first, and like for the first time you put a bid in, the thing doesn't have a price, so then like, okay, that's IV, but then the second bid, it has a price, and then it is changed, and then you're putting it in, so then it's based on realized, and then this third one, like the whole thing is that I don't think the academics are wrong. Like Tom is wrong. You know? Like, this conversation with the reason I focused on this talk about it was Jacob brought it up, and he was like, I look at it during the weekend because he's afraid to fucking get fired.
That's pretty funny.
even. It's overstated. So why your range based on that, and then also at extremes, it's understated. Like there was even Deribit, like pump happened, IV didn't go. Like, how do you not know this, bro? You're at a fucking exchange, you don't know.
Well,
there people came on up only and they were talking, and I guess the exchange part, the engine, they white label, but like they're clueless too.
yeah. Does Deribit doesn't actually take any risk on trades, do they?
You don't have to be a mathematician to run it. Like, what was that?
Deribit doesn't take any risk on trades, do they? It's all collateralized.
I don't know, but they're people like they have the Deribit research or whatever.
Yeah.
So they were observing things, and those people were like, oh, we saw that like during the dump, IV didn't go up. That's great. Like, of course, because people freeze. Who puts it in bids when the shit's acting?
When the shit's moving, right? That makes sense.
If there's not bids, the IV's not going to change.
Everybody just pulls their orders.
Yeah. And when nothing is happening, people think something's happening. That's why it's open.
You're right.
The only time it matters is for pricing, but everything else, the thing is like they because majority of people that use our shit uses with futures, we focus more on the underlying versus the pricing of the option. Like,
yeah.
Like the reverse of that, what that idiot used to say, that like expected move in phone is good for options. Like no, it's the odds of the underlying. It doesn't matter what like what else is there to know? It's the odds of that level. But they just, if they had accepted that, then they would have to give up that to concede the triangles and the nonsense levels that they come up with.
Right.
Yeah, it's not like it's based on math when it's options.
Yeah.
When it's based on bullshit.
Bro, I used to actually use the cone for options trading with just the HVP.
Yeah,
I used to. Yeah, I used to look for declining volatility, and then I would just put on.
But like on traditional, the obvious plays are taking, and you don't get filled. But like doing that, you get the actual range versus what pricing tells you, which is going to be. So like I was going to do that with big money. Actually, I never got to it because like I'm busy with this. But,
yeah.
You can tell if you just sold like a straddles, because the range that we get is, but price tells you a different range. The delta is how much you keep. The delta, that's basically
Yeah. Yeah, I would just put it on declining volatility and sell like 70% on both sides.
It really, everyone should be doing that. It just it takes more collateral, and it's like takes longer to get your returns, but you can know exactly how much.
Yeah.
It's pretty good.
How many days was that? 102 days.
We gotta make if enough people were doing options, we would have like. Would make more sense to like dedicate resources to it.
Yeah.
But if you looked at the curves and the Greeks, it's so obvious. Like where's the sweet spot, and like because they go 45 days.
Yeah, that's exactly it.
Yeah, it depends. Like you got to run the curve and then look at the slope. But like generally, because the whole thing is like, how do I make this doable?
Right.
Mechanics and easy, so I can keep doing it.
Where's vertical line? Oh yeah, what is the time?
This one is from like 15 minutes. I think like half an hour.
Yeah.
Exactly half.
Yeah, just sell options on either side 45 days out, collect them when there's 21 days out left on the contract.
I wanted to do, that's when I told the bankers to, I was like, because they were like, we want to move some money and buy emerging market. I'm like, why? Oh, I got so lucky that I'm talking to your wealth manager and you want to diversify. Like, why? Do you have any reason aside from your field? And they did it. So I was like, you know what? And it's not easy. I told her, okay, bitch, listen, it's like we're astronauts and we have our own rocket ship, but then you tell us to tell the travel coach when we want to travel. Why the fuck? But then that was a year ago and I never got to. I'm debating the reason. No, but they do that.
For all to see.
They sell these notes where they do exactly that, but then give you a fraction of the profit.
Yeah. Well, I mean, from the banker's perspective, is it for their clients or is it for them? Because
they have it's the thing like in what was that, Wolf of Wall Street, where he goes, no, the money isn't to leave the bank. It's the point is to get the money from the.
Yeah.
Like, if you have a lot of money, they come to you with like all these ideas.
Right.
That you get a little bit, they get most.
Yeah.
And then like they don't even. She was like, "Oh, we made you a lot of money," and I'm like, "Bitch, the supply is up 100%. Okay, if you're not up 100%, you're better off going at the beach.
Yeah.
And you're like a executive at some Merrill Lynch or some shit. Literally, it's better if you didn't exist. Like just buy the SPY and we mean like this is prevalent.
They're just counting the fees.
Yeah, all they do is and it's like guaranteed. You know, they exploit. Like my dad's not gonna fucking know. And then when I was like explaining to them, it was very obvious that they have no clue. Have no clue about anything. They know about fixed income things and like that's more finance, you know. It's not like finance.
Yeah.
But options and like buying stocks, they have no fucking clue. They do everything other places. Because I talk to the top, you know, you can't just talk to you go like I want an option, and then it's not like you got to wait for some asshole top. High on the chain to come and talk to you, and then that person has no fucking because before you could buy like bonds and just like
just coast.
Yeah, but they don't exist anymore.
Oh man, it's guaranteed losses if you buy bonds.
Yeah, now you got to pay them to hold it. You know, instead of deposits, it's funny. It's so if I have to pay you to hold my money, can I then do the same thing to you? Where before I used to come with deposits, now you pay me, right? Because it costs to hold money.
Yeah.
No man, the days are numbered. It's still out. It takes a couple of people with real money to fucking leave them, and then people go, "Oh, it's possible. I'm not gonna get hacked. I'm not gonna." Like Coinbase sells security to not the other way around. So it's already more safe.
Yo, I had my my tinfoil hat on the other day. Yeah. And I was like looking over how Bitcoin is mined. Let me see if I get it, because does every single number that they try and guess right on the SHA-256 algo, do they make
I debated these maxis.
Yeah.
And I convinced them to say, because like the first SHA is from NSA. So they go, we only won the Second World War because we broke encryption. That's the only reason we won. But now we're that only a set of the set of people who can invent encryption algos is not like everyone. It's a small set. They all worked at the NSA. So they used to, before the Snowden thing, they used to go to these conferences and like talk to each other, like the best cryptographers and like people.
Right.
Now they don't. But like
But
SHA is
yeah.
a thing from NSA. The first cipher that you need to mine, the constants come from NSA. And then in 2010, also they have a thing that like back in the 90s or whatever, you could have you had to have backdoors to encryption. That's why in the movies, the cops had these radios where like you could just tune in.
Right.
Because they had backdoors. But like the whole now they go no. SHA has no backdoor. It's completely free, and we're the only people who come up with it. But like you can use it against us, and please do during war even to Russia. You know? So like
okay. So here's the question I had.
No, that's exactly what I think too.
No,
and the whole thing is they want you on Bitcoin because they can see all the transactions. Like they're on the record saying it's so great that people use Bitcoin and not cash. Silk Road people, because we can track them and we can't track them with cash. So and if they told people, hey man, change, drop your dollar and pick up this one more currency, people wouldn't do it. But then if you say, oh my God, it's like such a rebel thing to do and don't do it or it fucks us up, then you'll do it. But it's what they want. It's like if you want to have the new world, why wouldn't you want it?
Right.
It's the thing.
But you know how like the all the maxis are always saying like, oh, you can't shut down Bitcoin because you'd have to shut down the internet. Couldn't the NSA just stop providing numbers to the network? Can't they discern?
No, you just needed for the first cipher. The constants come from them.
Yeah.
But it's not even that. They all have to run the same file. Even the 21 million, right?
Yeah.
If I show up to the miners with guns and guns to their heads and go run this file, it has 22 million.
You're right.
What do you think they're gonna do?
They're gonna run the 22 mil file.
And then now you have 22 million.
Man, it's like an illusion.
This is whatever we do is what they allow us to do.
Right.
If they really want it gone, it'll be gone.
Yeah, fuck, seriously.
When they don't like you, you see what happens. They show up with F-35s and like pull a Gaddafi on
you. Yeah. Get down.
Yeah. Then people think Arthur is like a wanted. If you're wanted, you'd be gone in a second.
Yeah, seriously. Yeah, nobody better tell Andreas about that.
The maxis all but facts are facts, man. And then you see with the guy who mines with the pen. He says the first constants you get from NSA. Oh, interesting. Oh, also in 2010, there was a memo from NSA to all the intelligence agencies not to use SHA-1. So that proves that they have a backdoor. But Bitcoin's SHA-256. But if SHA-1 has a backdoor, so then.
Fucking did I already check the monthly stokes? No, I did not. I never will. I never will.
That's insane, yeah.
Here we got for you we got reverse stokes, okay? Here you go. Where is it? No, not chart setting.
I was explaining to him rank of price. Like why would it and then he was getting wrecked. It's like on the way up. It's going up, it's going up more than it's gone up before. And yeah, well, guy, we even made this. I forgot these. Like we even made stokes useful. Like because the math of like predicting the cross is like not easy. And then some other guy helped us too. But that's probably even. We should look at those things. We made that one free for.
Yeah, this was a while ago. That was for the giveaway, right? Yeah. Here's your monthly stokes. Monthly stokes trending down. Oh no. Bitcoin to 12K.
It's like the price. What does it say right now? The cross will be when?
44.6.
Yeah. Yeah, it's it's the thing. It's again, it's the assumption. Like you can observe it. It's like the same thing with the RSI panel.
Yeah.
If RSI gets there, the number's right, but like your assumption that like RSI is mean incorrect. Like if it crosses, does it mean it's not gonna go lower? No. But like the price that it gets is.
Yeah. I told you, go fuck yourself.
Where is that Randall, bro?
It's funny. Smith.
Yeah. He came in, he was defeated because he's waiting gap. He's gonna do.
Yeah, where's the lowest gap, Smiths? Where is it? Tell us about the CME gaps.
Like, what is it? 12 or something? No, what was it? There's one. I was looking at the memes, and Johnny has
pretty good.
Okay. So I think there's one that's in your pants that you get. Yeah. I have there. Come through the gap. Contribute to this decay. What's the lambda, bitch? All these idiots that just hear me say lambda, and then they name their shit like, why is it called lambda, dumbass?
Yeah.
Why? And then like if it's like it's funny to us, and our people don't give a shit about your dumb things. They're so dumb.
Hey guys on Twitch, come talk shit in general. We're sitting here hanging out. Come tell us 112K.
But I was looking at the memes that Johnny made, and there's one.
Do we have a channel for it?
There's one for 5K. It's in It's in archive. I was just.
Okay, gotcha.
One on my fake Twitter.
Oh yeah, funny shit thing memes.
Yeah. Old stuff. That dumbass could be doing that shit now. Instead, he wants to LARP that I don't know what. Jesus, what is it called? Jesus, no. What's the guy's name? Coding Jesus.
Coding Jesus.
It's because like to these idiots, it was the same thing with. It's all Chinese to them, folks. So they don't understand like, oh, this is hard, this is easy, whatever.
Did you see the Yellen and the Chairman Powell speech today, or not speech, testify to Congress?
No, what happened?
Bro, that shit is such theater. Well, because it's like a testify to Congress. First of all the fucking questions didn't make any sense. They're all like, yeah, you're bad because you did this.
The black is the head of it, right? The head of the committee is the black. What's her name? Waters.
Yeah.
The dumbest person. It's a miracle. And she's in charge of the most complex thing. Come on.
Oh man. They literally like Chairman Powell was sitting there and he's like, yeah, your question doesn't make sense. Like I don't get it.
Yeah, and he has the best thing because as soon as like one side he doesn't answer because he goes like, that's political. You're complaining.
Yeah.
That's not our mandate.
They're all arguing over the fucking. They're all arguing over the debt ceiling.
You saw the thing, right? You saw where Mnuchin's wife was holding out the dollar bills. Like the whole thing with Trump.
Yeah.
Like they were telling the truth. Like, don't tell people what the fuck we do, asshole.
Yeah, dude, that picture was so good.
Like they went to the printer and they were like, "Oh, so you just print and whoever's closest to the printer gets paid?" Like, yeah, they shut up.
So we got home samples, right?
Yeah.
Dude, that's what my buddy was telling me. He's like, if you work at the candy factory, you get to take some candy home at the end of the day. We print money over at the bank, we get to take money home every day.
No, it's because they go, someone has to do it, and they're like, just trust us. And then, bro, these low rates that they give you. If I gave you $2 billion and said, give it to me back in the morning at 0 rate, You wouldn't be able to fucking make money if you had $2 billion. Like, it's whoever
gets the loan, yeah.
The further you get from the printer, the higher the rates get, and then by the time it gets to us, it's not you barely break it.
Yeah, like, exactly.
When you're close, like when they, and the government like can't go. I forget which one. Like they changed a bunch of rules, but like if they want to go pump his stock, like they go, here BlackRock or whoever, here's a bunch of, like, you do it for me, asshole, and you make money, I make money. Like it's when people, they're making money, they all look, look, what is it called? They look away. Like if problem comes, then they're gonna like, we like each other.
No Mary Browns in Moscow when Russian poop was eaten. Oh man. Yeah, I gotta take you guys onto a cultural Russian adventure. Do some live streams from the Kremlin. Alright, how much time we got? Oh shit, 15 minutes till market close. See the NASDAQ. 20% up for volatility today for the VIX. Pretty big move.
Oh, the thing about this is the thing it's good to know. So like if volatility, whatever percent, it's the square that you should expect in your return. So like if it drops by 20%, like if it's a multiple of something, you take the square of that for your return.
Okay, so like let's say volatility is plus 20% today, right? So you take a square of that for your returns?
So it's 0.2, so it's 0.4 you should be expecting.
Yeah.
Like you should expect 0.4 more.
Is it 0.4? No, it can't be 0.4 for root 20.
No, I'm saying if it goes up by 2%, then for returns it's 2 to the power of 2, 2% to the power of 2.
Right, okay, gotcha.
The multiple. But if you do 2%, then you have extra zeros. But if you go by multiple, if the multiple in front of volatility, that multiple power 2, it should be on your return.
Gotcha. Marky done a walk around and Barca was end of the day levels of interesting. Yeah, man, some of the places that Marky goes you don't want to see on a live stream though. I mean, I'll get fucking kicked for that for sure.
Everyone thinks they can do what Marky does, okay?
Bro.
Oh, I saw Marky do it, of course.
Yeah, Marky's HVP that never mean reverts.
Yeah, the co-create.
Yeah.
Are we not getting randos? Yo, do we need to suck on microphones? What the fuck?
Yeah, man, we gotta up the content, dude.
That chick slid in my DMs.
Which chick? Amaranth?
No, that scammer the other day. She was like, because I go in the Reddit Discord and hustle for new people.
Right.
That's a little more, yeah. Oh, Bitcoin. Oh, I forgot. I'm on hot bits with fucking leverage.
My parents had an exchange student from Ukraine. We only called him by his real name for the first month. After that, we all call him Suka. Rough, man, rough.
How come I can't have exchange students? Okay? Well, they don't let me adopt kids. And they don't let me have an exchange student. What the hell? Oh, I'm trying to help the Chinese, of course. Yeah. Oh, you from Vietnam? Oh, you come be my exchange student.